Well, good weekend, all. Ira Epstein, and here we are with your weekend edition of your Spider ETF stock market wrap-up. And this is for Friday, the 7th of June, 2024. Yes, I was a Star Trekkie. Who wasn't? I mean, it was great. You know, who didn't like that series? A lot of red behind me. A lot of red. Don't get me wrong, we have a few greens, but not mostly. Most of the markets are sitting here in the red. And the reason is we had a big report today, the non-farm payrolls, and it came in way beyond estimates. Now, 190 is the number here. The range of estimates that I saw was 175 to 190 with the whisper number that was around 158,000, and the outlier numbers, the downside, were from JP Morgan and Citi at 140,000 approximately, 140 to 150 in them. Whoa, and those two, coming into today, we're still saying a July rate cut was highly likely. I don't understand, with all the money they pay their economists, how they could be so wrong, but they are. They're dead wrong. First off, I think you're going to need 3 months in a row of weak data. You don't have it for the Fed to make cuts. They will continue to say they are not comfortable. They don't have enough evidence. They don't have the data to say to make the cut until I think they get 3 of them. Could I be wrong on that? Of course, just because I'm saying it doesn't make me right. But if you've ever gone back and you study how economists look, they don't want 2 of a point. They want 3 of a point normally to do it. And we've heard that already from Waller and some of the others, that that's what they want to see. This isn't one of those. Now, you might say, but Ira, if CPI falls down and that stays up, the Fed can cut. And I'm going to ask you, why? Why should they cut? If CPI is falling and you can deal with this strong labor, why not just leave things alone? Remember, when the Fed makes a cut, they're going to force CPI up over time. That's what happens. They have more people entering this labor force month after month after month. I don't know where they're all coming from. I assume they're migrants. I assume my age group, which are the baby boomers, are retiring. Not all of us are me. Well, I'll end up dead at my desk, but I'm doing my hobby. So I'm one of the lucky people in the world. But that's basically what is going on. Now, why would the Fed cut? Your earnings are going up. Nothing here says they should cut. So we're going to get, as you know, this week, the FOMC meeting, and the Fed chair has to come out sounding hawkish in some manner. No, it's not ready. The economy's humming along. We still have inflation that readings are too high, we understand, and we have to stay restrictive. We've got a strong labor market. We see at the outer edges weakening, like jolts, like ADP. Yes, but weakening isn't weak. Weakening isn't as strong as it was. It's not weak. Do you understand that? Really important. Then you're going to get the arguments over the weekend where the people that are really the academics come out and say, do you understand the difference between the household surveys and the establishment? For those that don't know, if you get my newsletter, and by the way, you can get it this week, just sign up for the free offer and I'll be happy to include you in it. I explain all that in detail so that you can understand how the two are cut. Now, we should all be calling our congressmen. The government, in its wisdom, we want to spend money on Ukraine, Israel, our border, our this, our that. We can find a million ways to spend our money. But now they want to take money from the Bureau of Labor Statistics for next year and have them cut back the amount of homes that they survey. That's the worst thing you can do. Your numbers won't be good. I think the survey number's too small at 60,000, and I've talked to people about that over multiple years. What's the right size? And it varies. I mean, for an economy our size, how much do you spend? What do you do? They want to cut back because they don't want to give them the money to do 60,000 households for this. They want to go to 55. Now, you'll say, that's only 5,000. It's 10%. That's not right. So I'm hoping they find the money to keep this going, all right? I think it's crucial to what they're doing. So let's come back to the markets and talk. UNG was up. Okay, I'm excited about that. If you're one of my subscribers, you know why. I want that up. And NVIDIA, well, look at this, only down $1 on a day like today, still showing a lot of strength. Each Thursday, I'm doing my best to ask you to give me a series of stocks to choose from. You can write me on my email direct, or you can go, if you will, on our YouTube. This one's from YouTube, and it's the guy's name is John, last initial name with an R. And this was his choice. He will get from me a free subscription to his choice of something that I have. All he's got to do is reach out to my staff. I've already written him there, and he will, and we'll work with him, all right? So this is SCMI. It's a super microcomputer company. You can pause here, read that, and move on. You can see the pattern. The market's been in a correction, but understand what this market did. This is a market that 2 years ago was worthless, wasn't doing much of anything. And then it caught on fire in 2023. As the word AI and we were talking, then it based out, and then the explosion happened like so many other companies that got caught up to the upside. It's now in a corrective mode. You have a pattern of a higher high and a lower low. The market has fallen back and fighting at the 18-week average for a decision what to do, and it closed under it. So now the bias is down. You see that. Next thing, the market, if you take a look, where could it go to? Maybe the 655 level. It's already getting oversold. So I would say the Bollinger Band is in play. It doesn't have to go there because it's not in a true downtrend. You don't have the pattern of lower highs, plural, lower lows, plural. You've got a higher high and lower low, but it can fall on its own weight if it wants to that number. When we talk PDBC, I moved it now here because we covered it last week. And I had said yesterday, are you going to have an island bottom? The answer came today, no. And today it wasn't oil that fell. What fell apart today were the metal markets off the jobs reports. Gold market down $65 today. Silver down $2 an ounce today. All the metals got hit, so that didn't happen. And now you've gotten back right here to the 18-week average, but you're in a downtrend. Lower highs, lower low, and under for the first time the 18-week average. So until the market gets back over the high of 2 weeks ago, you've opened the door for the potential if the market falls here. Even grains were down hard today. In KRE, the regional banks, I have problem wanting you to own regional banks. Does it mean I'm right? Of course it doesn't. Why do I say that? Because the higher interest rates stay and the longer they stay high, the more commercial real estate gets in trouble. They are praying. If I'm an owner of one of these properties and I want to keep it, I'm praying that rates start falling so I can talk to the bank, hey, look, you see they're falling, or you work your way out, you do something. But it's not going to happen. Now, the good news is some of these buildings will have another life. I heard that a number of them they're looking at them now to make hotels in downtown areas. Boy, that makes a lot of sense. That works out actually pretty well in certain areas. Now, not all buildings lend themselves to that. They're not all going to do that. They're not going to become green buildings. I've seen in Chicago where we have, they took floors of buildings and now they're growing food organically in them. They put in the lights, they've got air conditioning in them, and they can do those things. They've got water and not a big build out. So there are different uses that people get creative with, but this is still bearish. You've opened the door to get down to the 4620 level, the lower band, back to about where you were to see what it's doing. In MCHI, this is China. All right, if the market breaks through next week, 4350-ish, we could get back to the 18-week average to see what's going on. Now, Today, if you saw what's going on in China, they had their import-export numbers. They are exporting like mad, and they're importing very little. I think that they went up month over month, 7.5% increase in exports, and only 1.4% on imports. Therefore, their trade balance is growing. They're still doing what they do. They're manufacturing like mad, and they're taking it to areas that can take their products, and they're cheaper than everybody. If you have state funds that'll help you with losses, you can do that. Not every company needs to do that, though. A lot of these companies are just good at what they do. You know, just because we don't get along with China, and I'm talking the West doesn't get along with China, doesn't mean they're not good at things they do. They are. In XLI, Battleground, 18-week average. Trend up, bias down. Now you got a problem with momentum turning down. So the industrial sector has still got the problems, and you're narrowing in the Bollinger Bands. It's simply not the place to be. It's difficult. Then we come to energy today, and you know why the energy's down. OPEC goofing and made a mistake, and all they had to do is say, if conditions warrant, and make that really the focus, if conditions warrant, because that's not what the market heard. The market heard that starting in October, more barrels of oil are coming to the market as the end of the 2 million voluntary barrels that are being cut are going to be rolled off over a 12-month period. That's all the market wanted to hear. So you got 200,000 barrels a month coming back at you, blah, 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 and away you go. And that's what the market wanted to hear. They're flooding the market with oil. Boom. That's what went on. They've done their best over the past 72 hours to try to correct it. Nobody's listening. In UUP, one of the arguments, or one of the questions, it's not an argument, one of the questions that I posed all week long was, the U.S. is going to be higher for longer. I had said this all the way through. We didn't know if the European, well, we knew that when Canada moved, they made their first move as a G7. It was a given that the European Central Bank would cut rates, so they both did. But the U.S., when you look at our numbers, we have no reason to cut rates. So the dollar was falling against them because people said, I believe this, I don't believe they're right, that when you have a falling economy and you start cutting rates, you want to be in early because it's going to turn the economy back up. That part I agree with, but not against the dollar when its economy is still firing on all 12 cylinders. And when we keep adding jobs like this, I'm sorry. Now you might say, Ira, you're wrong. It's not 12. Okay, so it's what you had in the Viper, a 10-cylinder engine. It's not an 8. It's still stronger than that. And that's the point that I'm making. But I'm not sure I'm right on that, all right? I really am not. So I can't go by today's action because today was the jobs report. Need a little bit more time to see if people are buying that theory or not. In the gold market, well, certainly gold's got a problem. All the metals do. Why? A strong dollar, higher for longer interest rates. Those are the two elements, too much for the gold right now. A weak dollar, the gold won't like that. You don't have that. You're probably going to the 207.26 level now to regroup. Wouldn't surprise me. In the copper, I didn't think this was going to happen. I told you that, so don't write me how wrong I was on copper. I know it. I've admitted it. Read the commentary. Everybody gets wrong. Listen, I don't have the resources of Chase, of JP Morgan, and Citibank. How could they be so wrong on a July cut? Why don't you write them? Coming down here, looking at that, okay. That's probably where copper's going to have to regroup. That's what I'm thinking. Eli Lilly. Well, there's a drug about to be approved, potentially on Monday. Now, we have a lot happening Monday. You know that. They have a drug coming out that hopefully for dementia is going to get approval. We have NVIDIA, 10-for-1 split. And we have Apple with its big event taking place where we're going to find out what's the new things that Siri can do? How do they tie in AI, very important. But you're over the upper Bollinger Band. That means you're in rarefied air. You only stay over that number 5% of the time. But what it's trying to do is lift out of the narrowing in of this, and I get it. Here's Dell. It's been under pressure, and its numbers were good, folks. It's just been under pressure now 2 weeks in a row. Maybe it gets back to the 120 level. I think you'll see buyers show up at that price. Wouldn't surprise me. Rivian. Higher lows, higher highs. Lost the reading of the bearishness. So when you lose a bearish embedded reading, and we can go back here. I teach this in my enhanced Bollinger Band course. Let's get one more week. Yeah, one more. Come on. Yeah. Here you are. I'm looking for that if you lose the embedded reading. You go right up there, and now you come back and you closed over it. So this is one of these stocks that I think some people, including maybe me, are going to start buying this and putting it away, not for a trade. If I lose on it from the $11 area, all my money, I could afford it. I won't let it go to zero. But I'm just questioning, have they gotten to the point where they're okay? Now, we know they need capital. We know they have 2 more models coming. We know they've got strong backing behind them. And the car's a good car. And their truck is. If they can come out with a low enough price, it could be an interesting time for them on a vehicle. So I'm looking at that. And this was the first area where it's saying maybe at 11.13 it's worth a nibble, and you throw it backwards. I did that at NVIDIA, just so you know, at 458. And I told my subscribers, you know, we got to own this at this point because this AI thing could just be getting going. At 458, my clients are still in it. We've peeled off along the route a lot. I'm wondering if this isn't worth what I call, 458 a share wasn't throwaway money. This could be for some people. That's all I'm saying. Meta. Look at how it's coming back up here. Now, it's narrowing in a Bollinger Band. Momentum is no longer pointing down. It's not saying it's getting up to pick up and run, but it's more bullish than bearish by a lot. So we'll see what goes on with that one. And that should be it. Yeah, that's what I thought. So when you put it all together, we try to come up with things. By the way, I always have empty pages behind it because I define them if I'm going to add things for you. And one of the things I do want you to get involved in, and let's show that to you right here, is the free offers that we have, including my research. You heard me talk that I'm explaining this week already what's going to be and where they're going to be. Our free research page looks like this. At the bottom of it, after you choose, like select this offer, at the very bottom, you put in your name, your number, and away you go. So if you'd like to see our offers, there's probably 15 of them or so, go to iraepstein.com, free offers, or move your cursor up to the top there, give it a click, choose what you'd like, and away you go. It's a good week to get all these offers. I think you'll like what we have to write. You take care. I'll see you on Monday.